So this is an update on crypto. We're going to focus on Bitcoin here as the sort of bellwether. And the most important chart to be looking at is the long-term chart. In this case, I think the monthly works really well. We have a new month and we're right at the middle of it, right? So we're right in the middle of January. So we've got a good amount of action that's already happened and obviously a good amount of action that will. So the way the monthly candle looks now tells us a lot about what how the month might end and more importantly how February might begin. And so if we think about a cycle perspective, you think about this 4 year cycle people talk about. A perfect 4 year cycle would be exactly 48 months between low to low. And so the first cycle is a little bit murky. This is the one that ended in January 2015. But if you start it from here, you end up with a 39-week cycle. The top was on week 25, so still right translated, still bullish. You can see this is your advancing phase, this is your declining phase. We bottom here, and I use the swing lows as your bottoms, right? So like this is a monthly swing low. We consolidated here for quite a few months. We finally broke above this high, like maybe this month here, but this was the bottom. Theoretically, some people might count this as the bottom. It's sort of neither here nor there. But if you're counting from this swing low, the top was month 35. So this was your advancing phase. And this line here is a 10-month moving average, a 10-period moving average. This is your declining phase. So we bottomed month 47. So that's the cycle that just preceded this one that we're in right now. And so that means that that cycle bottomed December 2018. So this new cycle starts January 2019, and this is we are presumably in the advancing phase of this cycle, except it's possible, right? And you can see I've labeled this as a possible top on, you guessed it, month 35, which is the same month the previous cycle topped. So we came up here, made a high. This is our May June ICL, our weekly cycle low. We had another rally, made like a marginal new high, that's 69K. You can see some people are calling this a double top. Certainly could potentially be, but it's entirely possible that we've begun the declining phase in the same way that this was the top and then we had this declining phase. It's entirely possible we've just started that. Either way, we're on month 37. And so if it's going to be a 48-month cycle and this isn't the top, you can imagine a world where, let's say we rally month 38, 39, 40, 41. The top is close either way, right? Like you can see if it's a 48-month cycle, you would expect the top at least month maybe 40 at the most bullish, and then you have 8 months of decline. There's no reason why it can't go longer, of course. It's just a question of how stretched can an advancing phase really go, and I think that's what we're really going to test. And so for very practical levels, this level here is your first swing high. So once we broke below the low of November, which was 53,308, we had a swing high that in December. And then we made another swing high when we broke the low from December. We're now above that level. So that level is right about 42,000. We're now above that level in this latest rally, but most likely we go on to break this and maybe even break this low here, which is or maybe even test this low at 30. And so we need to recapture these swing highs. So far we've captured this one. The next big one we need to capture is this one up here at 53,000, which is obviously a long ways away, another $10,000. And so that's why if we zoom into the daily, into the weekly, we can see we're on week 29 of this weekly cycle. The previous weekly cycle ended on week 41, and then before that you had week 26 top low. You had a week 34. So we could be getting a weekly cycle low in the next few weeks, which would coincide with the daily cycle low. We're in week day about 42. The question is, will the rally out of those lows get us a higher high on that monthly chart, or are we gonna stay below these swing highs, right? Like, are we gonna rally up to here, for instance, and then roll over, or maybe even rally all the way up to here, make another slight almost kiss 69K before moving down again. So the good news is we'll see very clearly on the monthly chart if we are going into that scenario where month 35 was the top. And so this is the chart to watch. These are the levels that we're going to need to break. And once February starts, the low of January becomes of important interest, right? Like, so right now the low for January is 39,600. Assuming we hold that level for all of January, we'd be looking at February. We need to stay above that level to not create yet another swing high. The more swing highs you're beneath, the more the more bearish it is, because the more, you know, essentially the more upside momentum you need to get back to an uptrend. And so this is something that needs to be watched very closely. It could be a harbinger for the whole space. But we have very clear levels, and we're maybe 20 days away from the next daily cycle low. So we'll be really looking at that bounce very closely. Right now, we've probably printed a half cycle low, and so it'll just be a matter of patience. So we're on day 42. This is probably your half cycle low. So we're bouncing right now. Maybe we get up to around these levels, like a 47, before we kind of roll over and complete the cycle. Maybe we end up down in the 37,000 range. We'll see.